What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. Today, we are talking about 5 different ways that you can implement infinite banking in your life. 5 specific strategies. And these are actually 5 ways that I am using infinite banking in my own life right now. That's why I wanted to share it with you guys. Hopefully give you some inspiration, just some different ideas, different things to think about if you're on the fence about infinite banking, or maybe you have a policy and you're not maybe sure exactly how to use it. Because these things are really, really powerful. So I wanted to share the different ways that I'm using it. And also, another reason I wanted to make this video too is because I think a lot of the times when we're talking about infinite banking and dividend paying whole life insurance, which is what we use to implement the infinite banking concept in our lives, people get hung up on rate of return. Okay, now, is rate of return important? Sure. I'm not saying that we shouldn't try to get, the highest rate of return possible. But when it comes to setting up these policies specifically for infinite banking, to me, in my opinion, the rate of return is just a bonus. It's not why we set these policies up. Can you invest in the market and maybe do 6, 7, 8%, 9%, whatever? I'm not a huge fan of the stock market, but whatever. Can you get a higher rate of return? Sure. But can you do all the things that within your stock market account, wherever you're, or however you're doing that, can you get all the benefits and do all the same things as you can with your infinite banking policy? Probably not, right? So it's all give and take. And so for me, the net internal rate of return of these policies, which ends up being 4 to 5% net after expenses, and you get it's tax deferred, it's tax free if you set it up right. It's going to get that true uninterrupted compound growth. It's really good. Over 30, 40 years, that cash value can grow pretty well. So for me, that's a really good bonus, but it's not why we set these policies up. The 5 strategies that I'm going to show you in this video, they are why we set these policies up. It's how we, like infinite banking, it's how we utilize the policy in our lives, not the net internal rate of return. So I want to be very clear and make that distinction. All right, the rate of return that we get in the policy is just a bonus. All right, it's not why we do this. All right, so let's go ahead and get into it. My only ask, guys, if you find the video helpful, just do me a favor really quick, hit that like button. It really does help, pushes the video out to more people. And also make sure you check out the links in the description. I'm going to have a lot of additional resources and training around infinite banking that will really help you along your journey. So make sure you check that out. All right, so strategy number 1, the first way. The first thing I did with infinite banking, with my policy when I got it, was I purchased a vehicle. All right. And, it doesn't necessarily have to be a vehicle in your life. Maybe you already have a vehicle, but just in general, any large capital purchase that you make, it's your infinite banking policy, your whole life policy can be a great way to make those purchases. And I actually held off on purchasing my vehicle for a while until my policy was set up and I could borrow against it. And the reason is it's a much more efficient way to purchase a vehicle because it eliminates the opportunity cost, number 1. And number 2, it gives you a lot more flexibility as far as financing goes. All right, so let's break that down. Opportunity cost, guys. I want to share my screen here really quick because I want to pull up this compound interest calculator. And guys, when I learned this just like blew my mind. It changed my life. It changed the way I think about money. So typically what we're taught is there's 2 ways, well, I guess technically 3 ways to get a vehicle. You could lease it too. But as far as purchasing a vehicle, you could pay it with cash or you could get a loan from the bank, right? Now, if you get a loan from the bank, or like if you were to compare the 2, usually you'd want to, if you can, you'd want to pay cash because why would you want to pay interest, which would, make you pay more for the vehicle than you would have if you paid cash, right? Why not do that? Okay, that makes sense. But here's the problem is, and I'm going to use the example of my vehicle. So I paid $28,000 for my car, all right? But I borrowed from my policy in order to make that purchase. Now, here's why, is if I took $28,000 cash and I just paid cash for the vehicle, okay, I've got the vehicle, but I no longer have the $28,000. That $28,000 is no longer earning interest for me anywhere. I'll never have that money again. Okay. I've lost that forever. Now, that might not sound like a big deal, but watch this, guys. So if I take $28,000 and I plug this into a compound interest calculator, all right, let's say I'm 35. Let's go to 75. We'll do 40 years here. All right, let's say we're just going to do 4%. That's typically what we net in a cash value whole life insurance policy, the way we set them up. It's around 4.5, maybe upwards of 5%. It just depends on how you set them up and which company you go with. But let's calculate that. Look at this, guys. So in 40 years, that $28,000 in my policy, which I have, right? When I borrowed against my policy, the 28,000, I borrowed against my policy, not from it. Okay. So that $28,000 is still in my cash value growing at that net for, over long term, it gets, 4 to 5%. Right. So because of that, if I were to pay cash and I didn't use my policy, did my car cost me $28,000 or did it cost me $134,000 over the course of 40 years? Because when I paid cash, that money is no longer working for me. That money is gone forever, right? So when you start to think about this, and then you think about how many large capital purchases you make over your lifetime, this number really starts to add up. So this is one of the like a great way to utilize our policy is to eliminate opportunity costs and create so much more financial efficiency in our lives and recapture those dollars, right? So and here's the other thing too, guys, is not just the opportunity costs, but check this out. So when I was in the market for my vehicle, I was getting qualified for financing and stuff, and interest rates have gone up quite a bit, at least at the time of this recording. And I've got decent credit, not great, but it's pretty good. Close to the mid 700s now. I think when I was applying for the loans, I was like right around 700. In that range. And guys, I was being quoted 10, 12, upwards of 16% interest on these loans for these for the car, right? I mean, that's pretty expensive. That's really up there, right? But with my policy, I'm paying 5.5% right now. Like, okay, do we want to pay 5.5% interest or do we want to pay 10, 12% interest, right? So again, it depends on the interest rate environment because, interest rates might come down at some point again, and it depends on your credit as well. But already, so I've got multiple benefits here where I'm eliminating the opportunity cost, but also I'm significantly reducing the amount of interest that I have to pay. Because the way that, just in case you're not aware, when you borrow from your policy, there is a cost to doing that. And right now it's 5.5% interest. That does go to the life insurance company. But for me, that's a small price to pay to save, $134 or, $100,000, whatever, in opportunity costs, plus the interest I'd have to pay if I got a bank loan. Okay, so to me, it's a small price to pay, and also it's simple interest versus compound interest. I'll have a link down in the description below that explains the difference between the two. All right, here's the other thing, guys. There was no credit application. I didn't have to apply for anything. Okay, and when I make a payment, every single time I make a payment on that purchase, that $28,000, when I start to pay that off, all right, minus the interest, every payment I make, it restores my cash value so I can borrow against it again. So I'm basically recycling my dollars. I'm putting money back into my own bank versus if I were paying a third-party bank, the principal and interest is gone forever. Like, try calling up the bank and say, hey, I've been paying this loan for 6 months. All the principal payments that I've made to you, yeah, I want to take that out of your bank and use it for this opportunity over here. Can I do that? No, they're going to think you're crazy, right? With your infinite banking policy, with these whole life insurance policies, it's the complete opposite. All the money I've paid back into my policy, minus the interest costs, I can now borrow against. Again, guys, it's just, man, it's really, really powerful stuff. All right, so that's strategy number one is purchasing vehicles, making large capital purchases to eliminate opportunity costs, give you a lot more flexibility when it comes to financing as well. And when you make those payments back to pay down the policy loan, you're restoring your cash value so you can borrow against it again, right? It's really, really awesome stuff. All right, so let's move on to strategy number two, and that is investing in my business. So after I borrowed against my policy to purchase my vehicle, it was about a month later, there's a bunch of Black Friday deals and stuff like that on different pieces of software and tools and training, right? So there were some really good deals that I wanted to take advantage of for my business. So I borrowed against my policy and used that money to invest in those different programs, right? And the return I'm going to get on that is I mean, to me, it's infinite. Like when it's coaching and stuff like that, because I'm leveling up my skill sets. I'm learning new skills, different ways to make money. Right. Not to mention the software I use. It's going to make my business that much more efficient. So investing in your business is a great way to use your policy, because when you're investing in your business, you're typically going to get a really good return on investment long term when you do that. So investing in your business is a great way to do it. Strategy number three, guys, is paying off debt. And I'm going to make a whole separate video. I actually might do like a complete series on utilizing infinite banking to pay off debt, because man, it is so powerful. And this is probably one of my more one of my prouder moments, especially as a son, because here's what's happening. All right. So I'm not gonna go into all the details. All right, I'm gonna do a separate video on it. I'll link it down below when I have it. But basically, what I'm doing is I am utilizing my policy to consolidate all of my mom's credit card debt. So at the time of this recording, I found out last week how much credit card debt my mom actually had. I had no idea it was the balances were as high as they were. And she started taking me through her accounts, the balances, and the interest, her interest rates, and all this stuff, and the amount she was paying every month. I mean, she's just never ever going to pay off all of the debt. She's got 13 different credit cards, right? And here's the thing: that's pretty common here in America. I mean, if you go to usdebt.org, is that usdebtclock.org, something like that. You could see the amount of credit card debt in America. It's like $1.3 trillion. I mean, the average family has, probably thousands and thousands of dollars of credit card debt, right? So when you have a policy set up, it is a fantastic way to pay off debt or consolidate debt. Like you can pay off debt over time. I'll do training on that. Probably put it in the university as well. Make sure you join that. And then you can consolidate all of your debt as well. It just depends on how you set up your policy. But it just so happened that I set my policy up with it's got a lot of cash value up front. And so I found out how much credit card debt my mom has. And I'm like, okay, this is a no-brainer. All right. So what we're doing is we added up her all of her balances, got a total balance. I put in a request for that amount as a policy loan. And it's so easy, guys. Like you literally log into your portal, you tell the life insurance company how much money you want or need, no questions asked. Like there's no application, there's nothing. You don't even need to explain what you're using the money for. And so the money will be in the account in 1 or 2 business days. And then we're basically, I'll write her a check. We'll sign like an actual repayment form. And here's the thing is we want to treat our policies like an actual bank, guys. We don't just want to be handing money out to people, right? We want to take this very, very seriously. Treat this like an actual family bank where there's interest that gets paid back. There's an amortization schedule. Like I'm setting up an entire amortization schedule. And what's going to happen is, so it's going to consolidate all of her debt. She's no longer paying 20 to 25% interest. It's obviously going to significantly improve her credit. Right? She's only going to use 1 or 2 cards that have the best rewards from now on. And it's going to put about $400 to $500 per month back into my mom's pocket. Because the amount that she's paying every month, she's trying to pay them off all across the board, which is not like, it's not going to pay off the debt anytime soon. Right? So she was paying like $1,000 to $1,200 per month on all of these cards. Okay. Now that we're consolidating it, it's so much less interest that she has to pay. And when we set up the amortization schedule, her payment was like cut in half. So she's literally putting another $400 to $500 per month back in her pocket every single month. On what planet does that not make sense? And as she pays me back, and then I take that and I pay the loan back, all we're doing is we're putting money back into our family bank. That's it. Like, guys, what am I missing? Like, tell me how that is not amazing and so powerful. So start to think about how like just all the different ways that the policy can maybe help you in your life. Like this was actually in my blind spot. I wasn't even thinking about this until I had the conversation, and it just came up with my mom. I was like, Mom, I had no idea that you had this much credit card debt. We need to fix this right now. And she was worried about, like, it causing me problem, cost me money, whatever. And then I started to explain the concept of how these policies actually work. And no, we actually have our own family bank now. We can do this, and it's going to put so much money back into your pocket, not to mention how much it's going to save her long term, right? And then if you think long term, what does that have? What kind of effect and impact does that have on her retirement later on, right? What can we do with that extra 500? Her student loan debt has to, the payments are going to resume very soon. It's going to be another $400 a month. Well, we just found $400 a month by consolidating all of her credit card debt, guys. So yeah, really, really powerful way to use these policies, paying off debt. All right, strategy number 4, private money lending. So I'm still learning this right now. I don't have any deals in the pipeline, but this is absolutely something I'm going to be utilizing my policy for. Again, if you think about what a bank does, they lend money, right? So if I have my own bank over here with my dividend paying whole life insurance policy, why not use it like a bank? Okay. So obviously with private money lending, that is a pretty, a pretty intense strategy, I guess. Like a lot of moving parts, right? You want to make sure that you're educated and you know what you're doing. I'll have some resources down below if you guys are interested in private money lending. Check them out. Some things that I am just using to learn how to do it. Contracts that we need to have, protecting yourself, finding deals. There's actually a fantastic website and subscription, just a website you can be a part of, or network you can be a part of, that matches real estate investors with private money lenders. It's awesome. So I'll have a link down to that below if you guys are interested. But private money lending is definitely going to be a really powerful strategy for me, because thinking about it, guys, if I could borrow against my policy at 5.5% and I could lend it at 10, 12, 13, 14%, whatever the deal calls for, again, on what planet does that not make sense to do? That's exactly what banks do. You deposit money into your bank, they pay you 1% as an example, and then they lend it out at 5%. That's exactly what I'm going to be doing, or what we can do when it comes to private money lending. Now, again, you have to know what you're doing. Make sure you educate yourself. All right, that's the stage that I'm in right now. But while I borrow against my policy at 5.5%, my cash value is still going to get that compounded, uninterrupted compound growth, tax-free, while I make money over here. And then the profit I make on the private money deals is going to pay for the cost of the insurance cost. So maybe I net 10%. I don't know. You got to run the numbers there. But at that point, you're almost printing money, right? Assuming, again, got to know what you're doing. But really, really powerful way to use our policies. And then the final strategy that I'm going to be implementing when it comes to infinite banking and utilizing my policies, it's a really cool opportunity that I found the other day from the founder of the private money network that for private money lending. That I'll link that down below. It's going to be flipping equipment, in this case, forklifts. So again, I'm still in research mode on this right now, but that's where I'm at in my infinite banking journey. Is I've already, I purchased my vehicle. I'm investing in my business. I'm consolidating debt within my family right now. So I'm utilizing it. But now I'm thinking about, how do I use, I'm researching and learning different ways to take my policy and start to make investments and actually utilize it to create higher rates of return than what I'm borrowing at, right? So flipping equipment, forklifts, things like that. It's actually a really interesting strategy where it's kind of like flipping real estate, except you're just flipping equipment. And in my opinion, it's a lot easier than flipping real estate. You don't have to worry about contractors. You don't have to worry about, tenants and all this stuff, right? Depending on the real estate that you're doing. And this particular company, you're basically, you're the bank. They purchase the forklifts, they fix them up, and then they sell them, and you guys, and they split the deal. They split the profits like 60-40 or whatever. And I've seen people do really well with it. So that's going to be another strategy. So as I start to get those deals done, I will make more videos on that. I don't want to go too much into it and recommend it or anything. until like, I've actually done it in my own life. That's just how I am. I like to lead by example. But again, I'm just sharing different ways to that you can utilize your policy, just to hopefully give you some ideas. And I'm just sharing my journey, right? That's what I do on this channel. So anyways, I'll go ahead and wrap up with that, guys. I hope that was helpful. Drop some comments down below, leave some feedback, any questions that you have, and make sure you subscribe, because I'm going to be making a ton of content as I continue my infinite banking journey and how I utilize these policies, guys. They're so powerful and so life-changing, man. Especially like when I'm paying off my mom's debt, my mom's credit card debt, and I'm consolidating that, putting hundreds of dollars a month back into her pocket. It's going to improve her credit score. She's not paying 20 to 25% interest anymore. And she's putting money back into our family bank so that if something comes up later on down the road, we have access to it again, right? You never know, right? And I'm eventually going to be setting up her own policy too. So again, make sure you subscribe, because I'll be doing videos on that. So anyways, I hope you guys are crushing it. I hope you're doing well. I hope you found this helpful. Leave any questions in the comments, and I will talk to you in the next one. To your success, Matty Ice is out.